Okay, everybody, today is November 28th, 2025, 2:25 p.m. Happy post Thanksgiving. I hope everybody had a great Thanksgiving. If you celebrate Thanksgiving, and even if you don't, I mean, just take the advantage and, just be with your family, cook a lot of food, whatever your food is, and enjoy it. So today we're going to do some calendar work. Thank you for coming to the channel. Aberrana Trading Network. Um, so I decided today that I wanted to go over the calendar, the trading economics calendar, and let's just go through it. Let's have a let's have a 1 or 2 week preview. Let's just go over the American data releases. We'll read through some of the most important ones because this is just raw, straight up information. And, this is the information and the data sets that I trade off of. I like to know what the raw economic data is coming out. And, I do watch Bloomberg, but I like to be there real time. And, so hit the like button, subscribe, share the video with your people. And let's do some work on a Friday. Bulldogs is playing. My Georgia Bulldogs are playing today at 3:30 in about an hour. So I want to get this video done. Let's see. Let's pull up our calendar. Let's direct our attention to let's direct our attention to America. Oh, we'll just put it on all. No, let's not click all. Let's clear that. Let's go America. Let's go. Let's do that. Okay. So what we'll do is we'll refresh this and let's see. I'm trying to zero it in on America, on the United States. Sometimes it does it, sometimes it doesn't. So, you know, it's kind of better if it does do that. Uh, let's see. I could just uncheck all those boxes. I could do that. Let's go in and uncheck all these boxes. We'll uncheck these boxes real fast. Hang in there with me, y'all. So yeah, I ate a bunch of food yesterday. Used the bathroom 5 or 6 times because my stomach is not used to eating like that. I only eat about once a day. So let's go through this real fast. Let's take all these off. All right, and then we just have the US. All right, so let's go. Let's refresh it. Let's go to our calendar. So here we go. So today's Friday. We got the Fed balance sheet coming out today. Let me turn the volume down on my mic real fast. Take some dBs down. Okay, let's get back to this. Okay, so we have today at 4:30 we have our Fed balance sheet. Not very not much market moving information. Like I said, if you go into your tradingeconomics.com calendar, you can click any one of these on the title and you'll be able to actually read at the top the summary. The summary gives you exactly what's going on, and then you can click your forecast, right? These are all little tabs right up on the top here. You can click your forecast, you can click the calendar, right? Which will take you down, which will scroll down, and it will let you know your calendar release dates, your GMT, your Greenwich Mean Time, your reference, which time period they're referencing the information coming out. So, okay, then you have your actual, your previous, your consensus, your trading economics forecast. Okay, and then you can actually scroll down a little bit and it'll actually tell you exactly what it is. Like the United States Central Bank balance sheet, the central bank balance sheet represents the total assets held by a central bank. It reflects the scale of monetary policy actions, including holdings like government securities, foreign reserves, and loans to banks. Changes in the balance sheet indicate shifts in policies such as easing or tightening financial conditions. So you can get a direct explanation of what it is if you scroll down. And when you scroll down the page, you'll pretty much scroll down these two boxes. You'll go past this little line chart that'll be there, and you'll have two boxes before your description. So let's go back up. Let's go out here to our summary, and then let's go back to our calendar. Let's move on to Monday, December the 1st. So, Monday, December the 1st, we have ISM Manufacturing, which is going to be red information. It's November. The previous information that came out was 48.7. The consensus is 48.6, and the forecast is forecasted at 48.8. So, let's go in and let's see. We'll pretty much do the red days so you guys can get a explanation of what is going on, and we'll have a better understanding. So what I've been doing over the past few years is I've been just reading all of this stuff. Like, no matter what the country is, no matter what the information is, I always like to have a masterful understanding, so that way it is embedded in my mind, and I don't have to. I can just recall when I see what information is coming out. I can recall and know what is this. What is it going to do to the market? Is it market moving? If I have a miss, what does it do? If I have a beat, what is it going to do? Like, what is going to be the overall reaction? If it's in line, what is going to be the overall reaction? So I like to position myself, whether I'm in a trade, not in a trade, or whether I'm thinking about getting into a trade, because sometimes I will sit through the information if I've read and I'm paying attention to Bloomberg, and if I have a gist and a grasp of what might happen when the information is released. I don't mind being in the trades. So, and I don't mind sitting on my hands also. A lot of people don't trade through these information days, but they trade different instruments. I'm trading Forex. Like I said, I concentrate on the UJ pair, US dollar, JPY. So um, I'm pretty much risk on pretty much most of the time. So, all right. So let's go into Monday, December the 1st. We're going to start off the last month of 2025, and let's see what we're going to get into. So, ISM manufacturing PMI. So, we're going to go through the summary, and then we'll read exactly what the ISM manufacturing PMI is. That way we can have a better understanding, and then we can also, you know, be able to determine what our positioning needs to be. The ISM US manufacturing PMI fell to 48.7 in October 2025 from 49.1 in September, below market forecasts of 49.5, indicating an eighth consecutive month of contraction in the manufacturing sector. Production shrank 48.2 versus 51, and further contractions were also seen in new orders 49.4 versus 48.9, inventories 45.8 versus 47.7, and backlog of orders 47.9 versus 46.2. Okay, employment continued to decline 46 versus 45.3. Now, you might be saying, that these numbers are only fractions, and they're only moving basis points, but these basis points, you got to think they're talking about millions, and they're talking about really high numbers. So keep that in mind when you think, oh, it's not moving much, but a million, or 900,000, things like that. That's a number that moves. With 67% of panelists indicating that managing headcount is still the norm at their companies, as opposed to hiring. Okay, let's read that again. Employment continued to decline, 46 point or 46 versus 45.3, with 67% of panelists companies indicating that managing headcount is still the norm at their companies as opposed to hiring. These are macroeconomic numbers, macro for the United States. So this is what the effects that we're feeling. These numbers don't lie. These are the effects that we're feeling in the job market. If you're looking for a job, if you've given up looking for a job, you know, just because the market is showing aggressive progression, and a lot of people are saying the market is completely overheated, it's a bubble, this, that, and the third. Me myself, honestly, I'm shorting the dollar. I'm short the U.S. dollar versus versus the yen, and I'm going to be short until I see better information. And I learned this from studying the bosses of trading during the financial crisis and seeing how they analyzed the real numbers versus what the market was showing us. You know, it's all glitz and glam on the TV, but when you pull back the onions, the onion layers, you start to really get a real understanding. So once you have a real understanding of what these numbers mean and what's really going on, the numbers are not going to lie. The market, well, the information of the market is going to lie. And, people just have it's a wealth effect. People want to feel wealthy, people want to feel like everything is good, but you have to pay attention to the numbers. Okay, so meanwhile, price pressures eased 58 versus 61.9, while the supplier deliveries index indicated slower delivery performance for the third consecutive month, 54.2 versus 54.6. Of the six largest manufacturing industries, only two, food, beverage and tobacco products, and transportation and equipment, expanded in October, said Susan Spence, chairman of the ISM, Institute for Supply Management. That's what the ISM is. So let's scroll down and let's go into our description of what actually the ISM is. The United States ISM Manufacturing PMI. The Manufacturing ISM report on business is based on data compiled from purchasing and supply executives nationwide. Survey responses reflect the change in, if any, in the current month compared to the previous month. For each of the indicators measured, new orders, a backlog of orders, new export orders, imports, production, supply deliveries, inventories, customers' inventories, employment, and prices. The report shows the percentage reporting each response. The net difference between the number of responses in the positive economic direction and the negative economic direction, and the diffusion index. A PMI reading above 50% indicates that the manufacturing economy is generally expanding. Below 50% indicates that it is generally declining. Okay, that's USA ISM Manufacturing PMI. So if you want to read it or if you want to go through it again, and you can look it up for yourself on tradingeconomics.com. That's what we're all about, giving the information raw and real. So on Monday, December 1st, that should move the market. So the forecast is 48.8, the consensus is 48.6, and the previous number that came out is 48.7. So, mm, you know, we'll see. That's going to be market moving, as far as it's going to move the stock market, it's going to move the forex market. It'll probably move stock market numbers more than it will affect the forex market, because it's a way bigger ocean and it has way more different fish that's swimming in that ocean. So you have basically the breakdown numbers will come out at 10 a.m. Okay, so you have the manufacturing PMI, you have manufacturing employment, manufacturing new orders, manufacturing prices. So, and then an hour and a half later, you have 3 month and the 6 month bill auctions. And then at 8 on Monday, you have Fed Chair Powell speaking. Now, that could potentially move futures markets, it could potentially move forex markets. So, that is to be seen. And then you have construction spending month over month, which is old. It's from September. And then you have construction spending month over month from October. Um, and then we have Tuesday. Let's go to Tuesday, December the 2nd. You have Redbook, Fed Bowman, RCM, TIP, Economic Optimism Index. You have API crude oil stocks. You have LMI logistics managers, total vehicle sales. If you really want to be abreast of macroeconomic information, I just recommend clicking on these things. and just reading about them. Every time you see them, just zero your calendar in on just the U.S. data economics, and you know, just click on them so you can have a full understanding of what's going on in the macro environment. Wednesday, December 3rd, you have 7 a.m. You have some information coming out. You have NBA 30-year mortgage applications. You have mortgage market index. You have mortgage refinance index. You have the purchase index. And then you have ADP. Let's cover ADP. We'll click on ADP. So on Wednesday, December 3rd, ADP is the private. Okay, so private businesses in the U.S. added 42,000 jobs in October 2025, rebounding after an upwardly revised 29K jobs cut in September and above forecasts of 25K. Private employers added jobs in October for the first time since July, but the bounce wasn't broad based. The service producing sector added 33,000 jobs out of the 42. Wow. Led by trade, transportation, and utilities, 47K. Education, health services, 26K. And financial activities, 11K. In contrast, employers shed jobs in professional business services, minus 15, information, minus 17, and leisure and hospitality, minus 6K for the third straight month. The goods producing sector added 9,000 jobs, namely natural resources and mining, 7K, and construction, 5K, while manufacturing lost 3K jobs. Meanwhile, annual pay growth was flat in October from the month prior at 4.5% for job stayers and 16.7% for job changers. Pay growth has been largely flat for more than a year, indicating that shifts in supply and demand are balanced, said Dr. Nella Richardson, chief economist, ADP. So let's go down. Let's get a gist of what ADP actually is. United States ADP employment change. The ADP National Employment Report measures levels of non-farm private employment, non-farm private employment. The report is based on the actual payroll data from about 25 million employees and is produced by the ADP Research Institute in collaboration with the Standard Digital Economy Lab. Okay, so that's what ADP is. All right. ADP is not really market moving, but it is something to be abreast of. Okay, so this is Wednesday. We're still on Wednesday. Let's close this pop-up box down here. Okay, and so that's where ADP will have export prices, import prices, export year over year, import year over year, industrial production, capacity utilization, more industrial production. See what these numbers are year over years and month over months. So, and then at 10 o'clock, you have ISM services from November. Um, so pretty much the same thing, right? Let's see. The ISM Services PMI rose to 52.4 in October 25 from 50 in September. Let's see. Okay, so pointing to the strongest expansion in the services sector since February, both business activity, 54.3 versus 49.9, and new orders. Because there's a line in here that I wanted to go over. Rebound while continuing comparison employment shows lack of confidence and continued strength of the economy. Look, there was no indication of widespread layoffs or reductions in force, but the federal government shutdown was mentioned several times as impacting business activity and generating concerns for future layoffs, according to Steve Miller, chair of the ISM. That is a very misleading line to me. Everybody can fucking see that you can't get a job out here. Everybody's doing DoorDash, everybody's doing Uber Eats, everybody's doing Uber, everybody's doing Grubhub, everybody's doing gig apps to like are these numbers including gig apps? Like this is my thing. They need to in the employment line, ADP most definitely should start including gig apps, and this is something that no one's talking about. I don't see anybody talking about it. It's almost as if it's not happening. And it's almost as if they are blindly tracking it, but they don't really want. the general public to know the real numbers. If you tally the numbers of people and do that survey in your ADP and in your non-farm, then bro, you're gonna have a whole different outlook of what sentiment is and what the economic outlook is on employment in this country. You have millions and millions and millions of people doing these gig apps, and I mean, I'm just naming the top five. I mean, there's fucking 50 apps that you can do. So they need to start including those numbers in these data tabulations. Okay, let's go down and like I said, we just already the United States ISM Services PMI, the non-manufacturing ISM report on business, is based on data compiled from purchasing and supply executives nationwide. Survey responses reflect the change, if any, in the current month compared to the previous month for each of the indicators measured: business activity, new orders, backlog of orders, new export orders, inventory change, inventory sentiment, imports prices, employment and supplier deliveries. This report shows the percentage reporting each response and the diffusion index. An index reading above 50% indicates that the non manufacturing economy in that index is generally expanding. Below 50% indicates that it is generally declining. Orders to the service producers make up about 90% of the U.S. economy. Okay, so we have that. So you have ISM services, which is different, okay, which is different than what we just read, ISM manufacturing, okay? So you have two of them, ISM manufacturing and ISM services, okay? This is the non-manufacturing, what we just read. And then you have all of these different things. These numbers move oil too. If you trade oil, if you're trading offshore, forex account, or if you're in oil futures, this number, the EIA, you're going to have to pay attention to this. EIA numbers move markets. Let's go on and we'll read the crude oil and then we'll read the gasoline stocks. Okay? Like, if you're not paying attention to this information, man, I'm telling you, you're going to be left the fuck behind. In a very short amount of time, you're going to be left behind. America is moving away from all of these menial jobs, all of your fast food jobs, all of your field work, all of your warehouse work, and this is not doomsday preaching. This is facts. This is facts. The only frontier that is available to you to really, really, really um, defeat what is going to happen in the next 10 to 15 years, you better start learning finance. You better start learning investing. You better start learning trading. You better start learning macroeconomics on a global scale. You better start learning it. It's not about diving in and jumping onto the niche and this, that, and the third. No, it's all of it. It's all of it. Because this is a cash game. The money game, the finance game, this is a cash game. So mark my word, you're gonna want to be you're gonna want to be in the game. You're gonna want to be there, and you're gonna want to, you know, you're gonna want to be there. So this is what you're gonna have to do. Let's see. Uh, okay, let's read EIA crude oil. Crude oil inventories in the U.S. rose by 2.77 million barrels in the week ending November 21st, 2025, rebounding from a 3.426 million barrel drop in the previous week, and compared to market expectations of a half million decrease. At the Cushing, Oklahoma delivery hub, crude stocks fell by 68,000 barrels, making a third consecutive week of falls. Among refined fuels, gasoline stocks rose by 2.5 million barrels, and stocks of distillate fuels went up by 1.14 million barrels. Okay, so if you're in the oil business, if you're trading oil, if you're trading oil futures, or if you're trading oil spot, this is the information you have to be abreast of. You have to know this information. You have to keep your eyes on the ball. This is the playbook. You can't just play the game. You can't play the game. People don't play sports and people don't do other things. They don't go to jobs without information and without instructions. These are your instructions if you're trading, if you're investing. This is the game. You might not like it, but this is the game. And don't listen to all these goombas out here that tell you that you know, that they don't pay attention to fundamentals is the word that we use in finance. Fundamentals. Yeah, I pay attention to fundamentals because it matters. I might not like just, you know, zone out on it and make it my end all be all. But guess what? Big boy traders, that's what they use. That's why they have Bloomberg terminals in all of these hedge funds, in all of these banks. They use Bloomberg terminals. They don't use charts, they use information. And they take positions and they take long-term positions. And then they go on to the charts. They're not reading bars, pointing figures, not none of that shit. They're not reading any candles. What they're doing is they're looking at numbers. They're reading the numbers. They know where they want to get in at. They've read the information. They have the data, and this is how they trade. So this is the explanation. Stocks of crude oil refer to the weekly change of the crude oil supply situation. Boom. That's it. Let's go back. Okay, what did we just read? We just read crude oil, so we'll read EIA gasoline. Okay, and then you have down here you have crude oil imports, Cushing crude oil stocks, distillate fuel production, distillate stocks, gasoline production, heating oil stocks. You just have a whole wealth of information, man. EIA refinery crude runs change. You just have just man, I love this shit. All right, let's go down and let's read gasoline. Okay, stocks of gasoline in the United States surged by 2,513,000, or 2,513,000 barrels in the week ending November 21st, 2025, following a 327,000 barrels rise in the previous week. 2,327,000 barrel rise in the previous week. Okay, beating market forecasts of a 700,000 barrels increase. This marked the second consecutive weekly rise in gasoline inventories and the strongest since the last week of September. Gasoline. Why do you not want to know this? You put gas in your damn car every week. Some of us put gas in our car every damn day. Stocks of gasoline refers to the weekly change of the gasoline supply situation. Okay, simple as that. All right, let's go down. Let's go to Thursday, December the 4th. All right, this is Thursday, December the 4th. All right, what do we have coming out? We have challenger job cuts. We're going to read that. We have initial jobless claims. Okay, November. This is November information. Okay, um, this is going to be for the week ending November 29th, actually. Okay, you see your previous, you see your consensus, and you see your forecast. Okay, continuing jobless claims. Okay, you have jobless claims 4 week average. You have EIA natural gas stocks change. Okay, and that's natural gas. You have 4 week and the 8 week bill auctions. Fed Bowman is speaking at 12 o'clock next Thursday. 15-year, 30-year mortgage rates. You got to know this information. You got to know this information. You got to have skin in the game, man. This is skin in the game. Just knowing the information is skin in the game. You understand? Like, I could go deep, man, with what my thought is, but you have your Fed balance sheet coming 430, balance of trade, exports, imports. You understand? This is what you're seeing. You're seeing exports 280 billion previous. So it's like if you want, matter of fact, we'll click through those two also. But I wanted to read Challenger. Okay, so December 4th, Challenger's coming out. US based employers announced 153,074 job cuts in October 25. Okay, the highest total for the month since 2003 for the month, compared with 54,064 in September. Most layoffs occurred in the warehousing, 47,878 warehousing jobs. Tech, 33,281. Food, 10,662. And government, 7,883. Okay, most of the layoffs occurred in those sectors. October's pace of job cutting was much higher than average for the month. Some industries are correcting after the hiring boom of the pandemic, but this comes as AI adoption, softening consumer and corporate spending, and rising costs drive belt tightening and hiring freezes. Those laid off now are finding it harder to quickly secure new roles, which could further loosen the labor market, said Andy Challenger, Chief Revenue Officer for Challenger Grain Christmas. Through October, employers have announced 1,099,500 job cuts, the highest year to date total since the pandemic. Through October, through October, employers have announced 1,999,000, well, 99,500 job cuts, the highest year to date total since the pandemic, and up 44% from the 761,358 cuts announced in all of 2024. That's crazy. So far this year, government announced the most layoffs, 307,638, followed by tech, 141,159. Like, what the hell? Like, so, man, you guys have to really understand, man. You really should be abreast of this information and know this information before you even go out and look for a job. You need to know what sectors are hiring. You need to know, I don't give a damn what you're used to doing and where you're at and what your degree says you know how to do. Man, they're making things obsolete by the day. All of this information right here, all of this information related. This is related. Challenger job because this is related. The related information, ADP employment, average hourly earnings, average hourly earnings, MOM and YY, average weekly hours, average weekly hours, okay, referencing from September 2025, 34.2 average weekly hours. Come on, man. Continued jobless claims, employed persons, um, employment cost index, just all of this good information, man. You just have a whole wealth of information, a wealth of information. Challenger Job Cut Report provides information on the number of announced corporate layoffs by industry and region. Okay, so that's what you see when you see Challenger. Okay, let's go. Initial jobless claims. We'll read exports. U.S. exports of goods, this is December 4th. U.S. exports of goods and services rose zero point 0.2 billion, which is 200 million, to 280.8 billion. Okay, rose. If you're reading the numbers, zero point 0.2 billion. Okay, to 280.8 billion in August 2025, remaining near the $280 billion level for the fourth month as uncertainty surrounding trade policy persisted. Service exports increased zero point 0.8 billion to 101 billion point 8. Okay? That's 101 billion. So it was flat, okay? And then it put on zero point 0.8 billion. There goes your 800 million right there. Supported by stronger receipts from travel plus zero point 0.3 billion, maintenance and repair services plus zero point 0.2 billion, okay? And charges for the use of intellectual property IP zero point 0.2 billion. In contrast, goods exports fell zero point 0.5 billion to 179 flat, okay? Weighed down by lower shipments of consumer goods minus 1.5 billion, led by pharmaceutical products, industrial supplies, and materials down zero point 0.6 billion or 600 million, driven by declines in non-monetary gold and automotive vehicles, parts and engines, minus zero point 0.4 billion. These declines were partly offset by a $2.4 billion increase in capital goods exports, boosted by strong sales of computers. Okay, So let's go down. Let's read the description if it has one. Okay. So your United States exports description. The United States is the world's third biggest exporter, yet exports account for only 10% of GDP. In 2022, the main exports were industrial supplies, 38% of the total, capital goods, 29%, consumer goods, 14%, automotive vehicles, 8%, and food, feeds, and beverages, 8%. Main export partners were Canada, 18% of total exports, Mexico, 16%, China, 7%, Japan, 4.5%, the United Kingdom, 4 and Germany, 3.5%. Okay, so there goes your breakdown of who we send our stuff to. Okay, let's do imports. This is just all vital information. So just bear with me, be patient, get a lesson on a Friday. Um, it's what, 3 o'clock? 3 o'clock on the dot. Get a good lesson today, man. U.S. imports fell 5.1% to 340.4 billion in August 2025, driven by an $18.6 billion drop in goods imports. Okay. Non-monetary goals saw the largest decline, down 9.3 billion. Consumer goods fell 3.7 billion, with jewelry down zero point 0.8 billion and pharmaceuticals down zero point 0.7 billion. Computer accessories, and telecom equipment also decreased by 1.3 billion and 1.1 billion respectively. In contrast, services imports rose slightly by zero point 0.3 billion to 75.8 billion. Okay, so there goes your imports information as you see it. United States imports. The United States is the world's second biggest importer. In 2022, the main imports were consumer goods, 27%, capital goods, 26%, and industrial supplies, 25%, followed by automotive vehicles, parts and engines, 12%, and foods, feeds, and beverages, 6%. Shipments from China represented 17% of the total imports, followed by Mexico, 14, Canada 13, Japan 4.5, and Germany 4.5%. See, we're only pretty much doing import and export business with just a few countries. It's not like we're doing, it's not like we're doing a whole lot of. We're not spread thin like most would have you believe. Okay, so let's go back. Okay, and now we're moving to Friday, December the 5th, and this is where we'll stop on Friday, December the 5th. Okay. So we have red information coming, but this is the caveat. Uh, at 10 o'clock next Friday, and this is when I'm saying this, what you're thinking about in the forefront of your mind is your investments and your trading positioning and your risk management or your risk on or risk off sentiment. Okay, so when you're reading this information and you're going through the calendar, all you're doing is saying to yourself, what positions do I need to be in? Now I need to, after I read the information on the calendar and see what's coming out, I need to go and evaluate what my positioning is. What do I have trades? What trades do I have open? Which stocks do I want to liquidate or add on to? So forth and so on. So Friday, December 5th, 2025, we have core PCE price index month over month. And that is old stale information from September. I know you guys can't see it because it's kind of um, like I don't know why they do it. It's not prominent, but you can see it right here. It's September information. It's not going to move the markets. Okay, it's just not. It's old information. We need November information. So core PCE, price index, MOM is September's information. Then you have Michigan consumer, which is December. Okay, so it's coming out, and it's for the first week, I believe. Uh, yeah, it'll be. We'll read it. The University of Michigan's Consumer Sentiment Index rose slightly to 51 in November, up from preliminary 50.3 following the end of the federal shutdown. Despite the modest lift, the reading remains the second lowest on record, just above the June 2022 low, as consumers continue to grapple with high prices and weakening incomes. The current economic conditions index, okay, plunged 12.8% to an all-time low of 51.1, reflecting more than a 10% drop in assessments of personal finances and buying conditions for durables. The Consumer Expectations Index, however, edged up 1.4% to 51. By month end, sentiment among consumers with the largest stock holdings erased earlier gains, falling about 2 points from October, likely due to recent market declines. Year ahead, inflation expectations eased slightly to 4.5% from 4.6%, marking 3 consecutive months of decline but remaining well above the 3.3% seen in January. In contrast, long term inflation expectations softened to 3.4% from 3.9%. U.S. Michigan consumer sentiment is a red information um, uh, release. United States Michigan consumer sentiment. We're getting the description of what it is. The index of consumer expectations focuses on three areas: how consumers view prospects for their own financial situation, how they view prospects for the general economy over the near term, and their view of prospects for the economy over the long term. Each monthly survey contains approximately 50 core questions, each of which tracks a different aspect of consumer attitudes and expectations. The samples for the surveys of consumers are statistically designed to be representative of all American households, excluding those in Alaska and Hawaii. Each month, a minimum of 500 interviews are conducted by telephone, and those interviews are not conducted to poor ass people in this country. So if you don't have any skin in the game, they really don't give a damn what you got to say. There goes for all of you victims, all of you American victims, and all of you victim mindset people, and all of you losers who, hey man, get some skin in the game, and then your voice will be heard. They do about 500 interviews. So guess what? That means in a nice broad range of high middle class to ultra wealthy, that's who they're talking to. I mean, get out of the poverty zone. Do what you can to get out of the poverty zone. Okay, and that is Michigan. So, and then you have personal income month over month, personal spending month over month, all old stale September information. You have PCE price month over month and year over year September. Core PCE September. Michigan 5-year inflation, Michigan consumer, Michigan current, Michigan inflation, and then those are all those Michigans that come out at 10 are going to be updated numbers, like I just read. And then you have Baker Hughes oil rigs. So you previously had 407 oil rigs, and Baker Hughes total rigs count previously was 504. We can go look at those too. Crude oil rigs in the United States decreased from 407 in November 28 from hold on. Crude oil rigs in the United States decreased to 407 in November 28 from 419 in the previous week. Crude oil rigs in the United States averaged 499.17 from 1987 until 2005, reaching an all-time high of 1,609 in October of 14 and a record low of 98 in August of 1999. Okay, crude oil. Crude oil rigs count. So much for getting into that game for real. Let's see, where was I at? Baker Hughes. Total rigs in the United States decreased to 544 in November 28 from 554 in the previous week. Total rigs in the United States averaged 1,475.09 from 1950 until 2025, reaching an all-time high of 4530 in December 81 and a record low of 244 in August of 2020. So our reliance on oil drilling and stuff like that has really been falling. We don't rely on that shit like that. We just import the shit. So regardless of what they saying, regardless of what our presidents say about oil and our rig counts and stuff like that, you can see what's going on, man. U.S. total rigs uh, refer to the number of active U.S. rigs drilling in a given week. Okay, so that is pretty much going to sum it up all the way until December 4th, 2025. I don't expect a whole lot of market movement. Looking at the information, I don't expect a lot of market movement in stocks. I don't expect a lot of market movement in options. I don't expect a lot of market movement in futures. If you're scalping, yeah, you're gonna make money. If you're positioning, you know, if you're swing trading, you could make money off some sustained movement up and down from your ceiling to your floors. If you have an understanding of what your ceiling and your floors are. So we'll leave it at that all the way up until Friday. I'm not really too much worried about market movement in Forex because the information is pretty stale. The red information is pretty stale. Wednesday, ISM could move the needle a little bit, but it's not strong enough. It's not a strong enough data point to really move forex markets. And if it does swing it one way, it'll be a one candle move, and that candle either have a hellified long tail or a hellified long wick. So that is pretty much it for what is coming up for the week ahead. So I appreciate you watching. I appreciate you tuning in and going through this boring information, but this is the information that you have to have if you want to make some money in the markets. So yeah, stay alert, stay alive, and manage your risk, manage your position, scale in, scale out. Don't get caught up in doji days. Don't get caught up you know um, in consolidation days. Just watch your charts and just take it easy, man. We're coming up with it's the year end. This thing is gonna be rolling. January the 5th. It's gonna be rolling, man. So first trading day of the year, be ready. Don't end the year with any heavy losses. Don't end the year caught up in trades that you don't supposed to be in. And I'm pretty sure everybody understands the wash sale rule. So just offset your positions. If you're a big trader and you're a big retail trader and you got a lot of personal money in the game, you got a lot of skin in the game, just go over all of your positions. Start going over your positions this weekend and every weekend until the end of the year and see what you can get rid of, see what you can take profits on to offset losing positions. And just I hope you have a great accountant and just have a good weekend. Enjoy football. And I'll be back at you and we'll probably do this calendar breakdown once a week, probably Saturday, Sunday-ish type shit. But we'll break it down and we'll go over this thing and we'll get a better understanding of all the things that we are doing to try to be better traders and better investors. All right. Thank you for your time, everybody. Peace.